This is the Retirement Education Hour. Hi, everyone. Welcome to the program. Megan Mozak here, back in the studio today with financial instructors Kurt Cassidy and Dr. Paul Metler. And boy, do we have a great program for you today, especially in light of what's going on in the world and the markets. We're going to talk about market volatility and your retirement. And throughout the show, we'll be doing what we do every week, telling you about the Retirement Education Foundation and their mission to help you get educated about all things retirement planning so that you can walk into retirement with confidence and begin to check off all those goals and dreams that you have for your retirement years. And of course, that starts with planning. And so we focus on that here on the show. I want to remind you of the website where you can find information on the courses that the Retirement Education Foundation holds at major colleges and universities. And we'll give you more details on that throughout the program, how you can reserve your spot. Retirementplanningedu.org. Kirk, Paul, market volatility. It is not going anywhere, right? We get comfortable for a while and then something happens, and something did happen recently. It gets our attention. How do we begin to manage this idea of market volatility?
Well, I think, Megan, we've been doing this a long time. Paul and I have been in the business for decades. We have been teaching and volunteering for this national charity, the Retirement Education Foundation, for over a decade, and taught over tens of thousands of people now. And so what commonly happens, we see a pattern, right? So the classes that we're teaching are designed for those people within 10 years of retirement through retirement. And it tends to be almost like a master's level advanced class. So we tend to attract highly educated people with $1 to $20 million of investable assets. And a consistent pattern we see is that, first of all, everyone doesn't think they are this person. Every time we describe a type of person, they don't believe it's them. And we like to call people in their 50s. And now, and please don't be offended. We're just telling you, we've taught tens of thousands of people. We know better than you about how you're going to react, behave to markets as you age, what's going to drive success. We know more than you. I know you do a lot of research. We know you think you're convinced. We know you've had a lot of success recently. Over the last decade, you've had a tremendous amount of success. You have been disciplined. You've made a lot of good decisions. And we call people in their 50s, we call you the invincibles. Right now, you feel invincible. You've got it all figured out. You know everything you're doing. And what happens is you approach 60s and you get in your 60s, you enter the anxiety phase of your financial lives because you're starting to realize, I'm going to retire soon. I may not get to choose when I get to retire. And that's true. Only 40% of people get to choose when they retire. External things cause or force people to retire. And now someone else isn't going to be sending me a paycheck. So all of the behaviors that have driven me to success to this point isn't the behaviors I need to utilize going forward. So I have a lot of anxiety. I think I got it figured out until someone says, hey, you're getting laid off, or here's a buyout package, you should take it, and the anxiety kicks in. And then you'll enter into your 70s where most people get scared. And the reason why these things happen, here's why. Because on average, since 1980, we have had intra-year drawdowns of 13 to 14%. So at this point this year, we haven't gotten to the average drawdown. And people are now straight up panicking. And so, Paul, these different phases, people aren't insightful enough to recognize the anxiety that they're going to experience as they age.
No, they don't. And I think, again, this is something in the class that we address. And I think, we could talk a little bit about today about how people respond to market volatility and how they allow their anxieties to get in the way. Tell us a little bit about the class.
So real quick, the classes are 8 hours in length, taught over 2 evenings or 1 full Saturday. They're like a master's level course. They're taught at major universities in your areas. And no matter where you're at in the country listening to our show now, because we're all over the country, you can stream live into the university while we're teaching the class. And all the charity asks for is a $29 donation. You'll get a 200-page textbook. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
Yeah, Kirk, I think, it's for all of us, it's difficult to know how you are going to feel at a different stage of your life, right? So you mentioned difference between 50s and 60s. There's a difference between getting a paycheck and not getting a paycheck. If you're currently getting a paycheck, you may think you know what it's going to feel like when you don't, but you really don't. I mean, none of us do. But one of the benefits we as teachers of this class have is we've met a lot of people who've gone through this process, and we hear a lot of stories. And consistently what we hear is you're going to respond differently when you retire and you're paying yourself versus when you get a paycheck. And how you're going to respond to volatility will be markedly different when you retire than when you don't. And I think anticipating that is the key to being successful. And we're going to talk a lot about different ways to manage that anxiety and the market volatility that comes with that.
It's funny, Paul, is because the people listening, they're like, I'm not like that. I've saved $5 million. I'm a lead engineer in one of the automotive industries, or a CPA, or an attorney, or a doctor. I'm not like those people. I won't have anxiety. I'm not worried. No, you will. No, you will. I will guarantee you will. Paul and I's fear for you isn't that you're going to outlive your money. At least the people who are listening to our shows and attending our classes, usually they have saved $700 to $1 million to $20 million. You have the resources. Our fear isn't you outliving your money. Our fear is that you're going to way underspend what you otherwise should spend because you're invincible, because you think you got it figured out. You don't have a plan. I can promise you don't have a plan. Come to our class, and challenge us and say, no, I have a plan. And then really, we will bury you in showing you not only do you not have a plan, but you're going to spend half of what you should spend in your retirement. You're going to pay more taxes, and you're going to work longer. And as you age, you will increasingly have more fear and anxiety. We are going to have not what we're experiencing now, we're going to have major market events on average every 3 to 6 years. So that means, I don't know, 4 to 6 times through your 30-year retirement, you're going to have a major market event, and no one else is sending you a paycheck. And cognitively, things start to slow down as you age. How do you think you're going to respond to that? The problem is you're not getting real planning. That's the purpose of the class, is to help you find the right teams in your communities to be able to get you the right type of planning and stop being sold the idea that you can market time and stock pick your way to success. So go to one of our 8-hour courses. It will change your retirement. Go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll be back with Kirk and Paul right after this. Great to be back in the studio with financial instructors Kirk Cassidy and Dr. Paul Mettler. Hi, everyone. This is the Retirement Education Hour. We're glad that you've tuned in today for a very timely topic. We're talking about market volatility and your retirement. There's a lot to know. And at the end of the day, there is a lot of anxiety, and we're going to talk about how to manage that and some action items that you can be taking in the face of some market volatility we've been seeing and even market volatility we'll see in the future. I do want to pause here to be sure to talk to you about the courses that Kirk and Paul shared with you earlier in our program, and we'll continue to share about them. These courses are retirement planning courses, and they are really like master's level courses, and they are held at major colleges and universities near you. And those include the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, also the University of Missouri, Columbia College. And you also get the option to watch and participate from the comfort of your own home. These courses are also streamed live. So no matter where you are listening today across this great nation, you do have the ability to do that as well. Here's where I want to send you so that you can reserve your spot. The courses fill up pretty quickly. So go to retirementplanningedu.org. That's retirementplanningedu.org. Or you can call 800-240-8981. And we're going to get back now to the topic at hand. I want to remind you, you can listen to this show anytime you want. You can find it wherever you download your favorite podcasts. Search for the name of our show, Retirement Education Hour. So given what's been happening in the markets, Kirk and Paul, there is undoubtedly a lot of anxiety amongst people that are listening today. And of course, people who are near retirement, in retirement, have retirement on their mind. What should they be doing today?
So, Megan, this is so we need to sit in this and take a few segments. I mean, we get a little bit hamstrung by the limited time we have between our segments and total segments we have here. And it's really hard to watch people in their 50s and 60s and 70s just stumble and struggle and work longer than they should, not spend money. At the same time, recently, I love people coming to the class and we tell them, look, you need to find a team. You got to find a team to help you for this next phase of your life. This is different planning. This isn't stock picking. This isn't market timing. This isn't just choosing funds. And it can't be just a 4% rule. It is far more comprehensive than that. Now, your challenge is finding the right teams, and not many teams do this. That's the purpose of our class. And they're like, well, I don't want to give up control. Well, let me ask you, do you feel in control right now? Do you? Once you're retired and this happens, you won't feel in control, especially when political parties, and both parties do this. Just please, no one be offended, because if you listen to me during the last administration, I'm not choosing a party, but political parties will use your anxiety, your fears, your biases, and your emotions to benefit their party. Right now, there's some uncertainty, and there's a party that's struggling right now, and they want to create fear and doubt in the future. And maybe they are right to create fear and doubt right now. But one thing I can tell you, through the last 50 years of all the different administrations and everyone saying this is it and this is bad and they're bad and they're bad and they're terrible, the market just goes up. It just goes up. It just keeps going up. It ignores the market ignores all the noise. We have temporary moments of volatility. And so the key is not allowing your own personal political biases, your own personal vulnerabilities to drive your critical decisions around retirement, around spending, around all your financial decisions. And that is not easy to do. It's just not easy to do. And the most effective way to do that is having the right type of team around you that is building you the right type of plan, and the plan will tell you what to do. The plan, the math, plan, risk mitigation, the proper type of planning gives you the answers. And it eliminates your emotions, and eliminates your advisor's emotions, it eliminates everyone's emotion. The plan drives everything. And the problem is, none of you have this type of plan. You all just have an asset allocation, a 60-40-70-30. I mean, you got nonsense. You're taking out 4%. None of you know where to take your income from when the market's down. Once you're retired, no one knows where you should be taking your money from, income, when the market's up. You don't know how to minimize your taxes. You really don't. I'm just telling you. That's why this is like a master's level 8-hour course. That's why we've taught tens of thousands of people. That's why hundreds of people give us 5 stars everywhere you go. That's why people have donated to our national charity in the tunes of hundreds of thousands, I think actually millions of dollars, to support different charities, because we have changed their lives. If you're listening, I don't know what you're doing. I mean, seriously, a little blip in the market right now is bothering you right now is insanity. I mean, we've had the most stable markets we've had for the last 15 years. Just short term, like 2022 was a blip. Before you knew it, it was right back. And you're worried about we're 10%-ish off the all-time highs, and you're freaking out, and every TV show and news station has the markets are crashing, we're going into a recession. Whether we do or we don't, it shouldn't impact your spending. These things are going to continue to happen. It's not going to change. Paul, I'm sorry. I went on a rant. Sorry.
Yeah, no, I mean, I think this is a big topic, right? And I think, like you said, we're going to maybe do this in a couple segments. I mean, the one thing you posed earlier, and maybe we should come back to it, is you sort of asked the question, do you feel in control, right? I think it's a really poignant question. I think, people are so afraid of losing control, especially in uncertain times. People are so afraid of losing control. The way they manage that is they do nothing, right? They freeze, which is just physiological. They do nothing. And the truth is, doing nothing is doing something. It's just doing the wrong thing, right? And freezing and being afraid and being overwhelmed and not making any decisions because you're afraid is not a solution. While it may feel good, it's not a solution. And at the end of the day, avoiding getting a plan, avoiding addressing these issues may feel good for a moment, but in the long run, you're hurting yourself. And the best way to do this, we all understand education, knowledge is power. Come to a class, learn, get some information, promise you with that information, you will be more powerful to do what's best for yourself.
Paul, it's a lack of trust on who to believe. And that's the purpose of the class. It gives you the knowledge to know what to look for, to give you that control you're looking for. Doing nothing is not control because the market, you don't control that. So attend one of our 8-hour classes. If you'd like to register, go to retirementplanningedu.org. These 8-hour classes are 2 evenings or 1 full Saturday. That's retirementplanningedu.org.
And we'll be back. Plenty more with Kirk and Paul straight ahead. We are back, and this is the Retirement Education Hour. Megan Mozak alongside financial instructors Kirk Cassidy and Dr. Paul Mettler, both with the Retirement Education Foundation. We've been telling you about the Foundation's courses. These are similar to master's level courses on retirement planning, and boy, is that needed more than ever in this day and age. If you want to retire successfully, it does take quite a bit of education, and the good news is the Foundation is well equipped to help with that. These courses are held at major colleges and universities near you, and those include the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, the University of Missouri, and Columbia College. You can get that list and look through for times, dates, locations to attend these courses at retirementplanningedu.org. That's retirementplanningedu.org. The phone number, 800-240-8981. We encourage you to register right now if you're interested because these courses do fill up fast and you can reserve your seat today. Now, Kirk and Paul, I want to get back to our program today about volatility. We were talking just a moment ago about trust, this lack of trust, and that leads to people feeling anxious and perhaps making poor decisions with their investments in the face of volatility. But I want to back up and try to understand, why is there so much distrust of the financial industry?
Well, I mean, that's a very difficult question. I mean, I think the financial service industry historically has attracted more sales-oriented people who sometimes, even without much education, can make a really good living. What drives people to making many major decisions in life is based upon how convincing somebody is and how good they are at sales. And there's just a lot of good salespeople out there that are less focused on trying to help you to produce the best outcomes for yourself, and maybe to produce the best outcomes from themselves. I mean, the problem is the way the industry is structured, no matter what they do, and they keep trying. I mean, even we are fiduciaries, right? I mean, in our private practices, we're fiduciaries. I would say even a CFP, a fiduciary, we are conflicted. Anytime we're helping someone in retirement, we're conflicted. And we're conflicted because the more money of yours we manage, the more money we make, right? So, translation, the less you spend of your money and the longer you work, the more money your advisor makes. So, there's not really an incentive for the financial service industry to convince you to spend more money and to convince you to retire early. In fact, there's an incentive for them to lean into moments of volatility to convince you to buy an annuity, right? I mean, that's a classic case. You feel out of control. The market is volatile. You're scared. Here's the silver bullet, buy an annuity. And I'm not saying annuities are all bad. That's not even my point. The point is they use your fear and anxiety, instead of trying to make you feel more confident and comfortable and educating you and really building you a plan. I'm telling you, everyone listening here, you don't have a plan. Go to the charity's website. Don't even come to the class. Go to the charity's website and go look at a retirement sample plan. We have a webinar. It's 30, 40 minutes long. Just watch that, and you will see that you don't have that, okay? You don't have anything like that. And so there is no incentive to give you that because the fear is what allows them to make more money. I mean, I personally know many people in the financial service industry hoping for market corrections right now so they can sell you more annuities, so they can make more commissions. I mean, that is a common discussion going on in the financial service industry. So that's why there's a lack of trust. I mean, bottom line, that's a lack of trust. Now, then you throw politics in the mix, and I mean, we can't be any more divisive as a country. People, they get entrenched, they get anchored in their biases so that they convince themselves and lean into those anchoring bias to create more anxiety and fear. That's the disconnect. We have to find a way, because the data doesn't help you. The markets are often way up. They are up much more than they are down. If you put $1 million in the stock in the S&P 500 and 20 years ago, you'd have almost $9 million today. And we went through some tough times in the 2000s. We went through a pandemic. We went through 2022. We went through 2016, 2008, the dot-com. We've been through it all, but yet your $1 million worth $9 million today. The market will just go up. It's how do I manage the times when we have our volatility? Because making bad decisions, we know the best times in the market are after the worst market volatility. That is when the market does its best. And there's some crazy data around this, Paul. There's crazy data.
Yeah, there is. I mean, historically, we know that when consumer confidence is low, right, the following year, the markets do great. When consumer confidence is high, the following year, the markets do poorly, right? It goes back to what you say all the time, which is you can't time the market. And panicking and getting out when the times are bad is the exact opposite of what you should be doing. If I can add one more sort of wrinkle to this, if you don't mind, we're talking about trust, this whole issue of trust. As a psychologist, I think a lot about trust and anxiety, or at least a previous psychologist, let me say. And the one thing we know is if in general you feel distrustful, and there may be reasons to feel distrustful, not just to the financial industry, but in the world, right, in your life. There may be reasons to not trust everybody, but what people end up doing is they end up with these cognitive distortions where they take one area and they overgeneralize to everything. Right? I've met people in the class who are saying the world is falling apart, right? This is bad, that's bad, and they take that and they overgeneralize to everything and everybody they meet. And all of a sudden you can't trust anybody. Listen, you can't go through the world and trust nobody. But the best way to battle distrust, the best way to counter distrust is getting knowledge, right? I mean, ask anybody. The more information and knowledge you have, the more tools you have to discern who should you trust and who should you not trust. So don't take our word. Come get educated. Learn some things. This is an 8-hour class. Come get educated. That will be your best ammunition to fight anxiety and distrust.
That's awesome, Paul. You know the one thing I definitely trust? I trust the stock market.
Yes.
The stock market is going to go up. It's going to go up. It's going to go down. It's going to go up. It's, over any extended period of time, it's going to go way up. That's what it does. It always has. It always will. It's in between. How do you manage the different times when it is volatile? And that's some of the things we're going to teach you in this 8-hour class. All you have to do to register is go to retirementplanningedu.org. That's retirementplanningedu.org.
And we have plenty more for you. Stick around. We'll be back with Kirk and Paul right after this. Glad you're with us. This is the Retirement Education Hour. Megan Mozak back with financial instructors, Kirk Cassidy and Dr. Paul Mettler. And they are both with the Retirement Education Foundation. And the foundation hosts the courses that we've been telling you about. These are like master's level courses on retirement planning and so necessary in this day and age. Maybe you're thinking about retirement or newly retired. We want you there, and this is how to get registered. Simply go to the website, retirementplanningedu.org. That's retirementplanningedu.org, or call. Here's the phone number, 800-240-8981. That's 800-240-8981. These courses, I told you, they're like master's level courses, and they're held at major colleges and universities right near you. The University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, also the University of Missouri or Columbia College. You can also elect to listen and participate in these courses online. They are streamed live. So go to the website and reserve your spot. Go to retirementplanningedu.org. We're talking about market volatility today and covering just a ton of ground on this topic. And it's so important, especially right now, given what's been happening on Wall Street. I want to ask you a question, though, Kirk, because I heard you say earlier in our show that the market, you expect it to go up over a period of time. But that's not what's happening. We just saw a sell-off. So help me understand what you mean there.
So what I was saying is the one thing that I can trust is that over any extended period of time, the market's going to go up. We just don't know when it's going to go. Nobody knows. Come on, listen. We can have all the talking heads on CNBC and Bloomberg and all the experts and all the portfolio managers and all the CFAs and all the credentials. Nobody knows. All the economists, they don't know anything. They don't. I mean, Paul gave you a fact. When consumer sentiment is high, the next year the market's low. I mean, it's so crazy that people really still pretend in today's day and age that they can predict any of these things. They can't. But what I can count on, and the one thing I can trust, is over any extended period of time, the market is just going to go up because that is what it's done forever. Ever. Like, if it doesn't, the money is... That's not what you need. If it stops going up, we've got bigger issues in our society. Okay, and if you don't think the market's going to keep going up, you just need to keep working forever. Just keep working forever. Don't spend any money and leave the $76 trillion that the baby boomer generation's already going to leave to the next generation because you are so afraid. Hell, let's make it $100 trillion we're going to leave to the next generation because of fear. We already know that when the amount of money you retire with today, when you retire, 80% of you will have almost 100% of that wealth the day you die because you won't spend the money. You're too afraid. But you're in your 50s right now, so you're invincible. You just start getting anxious in your 60s, right? That's my point. You guys don't even know what you don't know about your own behaviors and the money. See, listen, what we know is the market does best after its worst days. It does best after its worst years, historically speaking. That is what's always happened. No one can time that. No one can stock pick or market time around this. And the insurance salespeople that you're listening to on radio shows, we're a charity. I hope you guys get that. And I try to warn you all the time. All the other people, I know everyone on the local market radio shows. I know all of them. These people, 80% of what they sell is annuities insurance. Okay, so they're looking for these market events. Oh, do they love it because it makes them busy and they make a lot of commissions. The market isn't your enemy. Now, I'm also the person that says If you have what you need to give you what you want in retirement, stop. You have to be insane to risk what you have for something you don't need, which kind of echoes a little bit of what the insurance salespeople say. Now, right? I mean, they're kind of like, if you have enough, stop. Just buy in a new. No. Here's what we're telling you. Is if you find the right team that will spend 30, 40, 50 hours to build your individualized plan where they're iterating all different models to maximize your income, reduce your taxes, and mitigate all the risks. Long-term care, mitigate if one spouse dies early, mitigate those massive market events, great recessions. What drives success is drawing your income from the right sources when the market goes down. And the market goes down on average 13, 14% per year. It bounces back. We have an intra-year drawdown of 13 to 14%. So when you have this much volatility naturally, and then we have eventually a recession, you have to have accounts, we call them pivot accounts, that you can go to withdraw your income from. And then when the market goes up, you can pivot to another account to take your income from. And you never rebalance. You never sell anything in your portfolios. You don't sell a thing if your portfolio is down because you are locking in those losses, causing something called sequence of returns risk, which is the enemy to your retirement. Okay, so that's the problem. It's how you build your plans with the proper asset allocation, and that sounds so corny, I know, but it's called dynamic income planning, where you're taking your income from. So we teach this in the class so that you can go out and test the people you're hiring to see how they're going to take your income. And if they do this right, Paul, instead of living on 4%, using the 4% in retirement, you can actually have 6, 7, 8, 9% withdrawal rates, pay less taxes, and have less fear and anxiety.
So, yes. So I'm going to take a second here and summarize what you just said because that was a lot, okay? This is what I'm hearing you say. Tell me if this is correct. That over an extended period of time, markets are going to always trend up. They just will, right? I mean, go back since the beginning of the market. Over time, it's going to trend up. However, within a period of time, markets fluctuate all the time. And the only way to manage that volatility in that short time is through asset allocation. And creating what you're referring to as pivot accounts. Is it fair to say, Kirk, that if you don't have those pivot accounts, if you don't have accounts that you can turn to during market volatility, the fact that markets keep going up doesn't help you. You have to have those pivot accounts. Is that fair to say?
It is. And a 60-40 portfolio that's not a pivot account.
That's not a pivot account. That's right.
Yeah, you nailed it, Paul. I mean, it's really about, especially as you approach retirement and then because we don't know when we're going to retire. We just don't. No one has full control of that. So you better have sources that you can go to if you needed to retire in 2022 and your portfolio was down 20-25%. Instead of panicking or going back to work, you're fine. The market's good. It came back, didn't it? You just needed to have the right place to take the income from during that period of time when the market was down. And it wasn't bonds, was it? Bonds didn't work for you that time, did it? So we got to explain this to you in an 8-hour class. That's why it's like a master's level course. Just do yourself a favor. Attend one of these courses that the Charities is hosting at retirementplanningedu.org. Register at retirementplanningedu.org.
And we'll be back. There's more with Kirk and Paul right here on the Retirement Education Hour. Glad to be back with Kirk Cassidy and Dr. Paul Mettler. Kirk and Paul are financial instructors with the Retirement Education Foundation. We want to make sure you have registered for the Foundation's courses on retirement planning. These are really like master's level type courses, and they're held at major colleges and universities near you, including the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, also the University of Missouri and Columbia College. So no matter where you're listening, there is a location near you. The other thing to keep in mind is you can attend virtually. These courses are streamed live. You can get all the information and reserve your spot at the website retirementplanningedu.org. That's retirementplanningedu.org. or pick up the phone to reserve your spot at 800-240-8981. And I want to keep you posted on this important fact that you can download any one of our shows as a podcast. You can find our programs wherever you find your favorite podcast. They are downloadable so you can listen anytime. You can share with a friend or a neighbor. Just search for the name of our show, Retirement Education Hour. And this week's show is all about the market volatility we've been seeing, but also how to manage that and how to think about it and how to drive success in retirement. And I do want to ask about that particular point, guys, because if we do have this market volatility and we know that there's going to be fluctuations up and down, how do we drive performance in our investments?
You know, it's funny, Megan, because Paul, in between segments, was sharing with me, because I hogged the segment again, that he was listening, and he said, if someone isn't a regular listener, they may not have understood what I was trying to explain in the last segment, because it could be confusing, because I was saying, right, if the markets always just trend up over any long periods of time, I think I can help clarify, and maybe I'll bring in the doctor to make it even more clear, which he often does for me, is what will drive success in retirement for you from a performance perspective, an income and a performance perspective. What's going to drive success specifically from your investments isn't technically the rate of returns or what you're investing in. It's where you're taking your income from during different market conditions. Now, that may sound really confusing, and we cannot teach that in an 8-minute segment. It's not possible. It's one of the reasons why the classes are 8 hours in length. It's like a master's level course. See, there's a difference between average returns and real returns. And once you begin taking income in retirement, that significantly impacts, it's called sequence of returns risk, impacts your real returns and your real performance in retirement. So, while I often tell you on this show, you can have income withdrawal rates of 6, 7, 8, 9%. You don't have to take only the 4% rule, which means most of you should retire earlier than what everyone else is telling you. You can do those things, but to execute those things, I'm not telling you need 6, 7, 8, 9% returns. You actually don't even need those returns to be able to generate that type of income stream. You need real returns by making sure that you have different types of portfolio accounts for different market conditions that aren't correlated. Now, historically, we've used stocks and bonds. That hasn't been working since 2016. Stocks and bonds have been going up and going down in correlation over 90% of the time. That isn't the answer. You guys need to trust us. That's not the answer. And when people build you your 60-40 portfolios, it's not like when the equities are down, they're just going to take it out of your bond portion. They take it out of one bucket. You got to have many buckets of different types of assets in your IRAs, in your non-IRAs, and you have to take the income from those different buckets depending on market conditions, and you can't let anyone rebalance your portfolios ever when the market is down, ever. So we know the market's going to be down. We know we're going to have volatility at different times. So you better have a 20, 30-year plan anticipating several major market events so that you don't have to rebalance and you have pivot accounts to go take your income from to drive the real returns over your retirement. Paul, did I do a better job?
You did. Now as I'm listening, I'm thinking it's so counterintuitive, right? I mean, I think people think, well, wait a second here. Real returns, right? Real returns? What are we talking about here? People assume that, if your average return is 8%, you're going to do great in retirement. But here's the thing.
No.
It's not true, because at the end of the day, it's the real returns. If you don't have a pivot account, an account that you can turn to that has very little volatility during times like now, it doesn't really matter what your average return is, because when you start selling at a loss, sometimes you dig a hole you can't get out of. So it's not about average returns. The key to succeeding is making sure that you have accounts that you can turn to during these bad times that you could take your income from, allowing those accounts that have a lot of volatility to come back. And then as long as you do that, you will be successful. The challenge is not easy to set that up. If I'm a listener, I'm thinking, okay, a pivot account. How do I set up a pivot account? What is a pivot account? No one's ever talked to me about pivot accounts.
It's not a product, folks. It's not an annuity. It's not a bond. It's not. It's many. It can be many different things. I don't want you to think we are a charity. We're not selling you anything. It's not. We're not talking in code and.
It's a strategy, right? It's a strategy.
That's right. And that's why the class is 8 hours, Paul. I mean, so I listened to you just there, and of course I'm jumping in because I'm always talking. The listeners are probably cracking up because this is typical. But I'm listening to you. I'm thinking, the truth is, Paul, in our class, look, I can show you how you can have an average rate of return of 7% over a 10-year period of time with one of your funds, and you actually lost money. If you lost early, you've lost money. So here, let me give you an example. If you had $1 million and you lost 50% this year, it would be worth $500,000. The next year, if it went up 50%, it'd be worth $750,000. Your average rate of return is 0. Your real return is negative 25. So now compound that situation with taking your withdrawals, your 4 or 5% that the public and the experts tell you should take, on top of a portfolio when it's down. We do that in the class. We show you a portfolio over a 20-year period of time that has an average rate of return of over 10%. Over 10% average rate of return, and we withdraw 5% a year out of it, and it runs out of money in 17 years. It's called sequence of returns risk. That's the secret to managing volatility and driving performance in retirement, so you can have more income and less fear. Attend one of our 8-hour classes, and we're going to teach you this concept so you can find the right teams to help you do this. That's the purpose of the class. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll return. There's plenty more Retirement Education Hour coming up next. Happy you're with us here on the show today. The Retirement Education Hour, Megan Mozak here, and I'm in the studio, as always, with financial instructors Kurt Cassidy and Dr. Paul Mettler of the Retirement Education Foundation. And the foundation does such great work helping those of us in our communities who need that confidence and really that education to get through retirement successfully. And it does start with education. So we want to direct you to the website, and this is where you can register for the courses. These are like master's level courses, and they're held at major colleges and universities. And I'll list those out for you, and you can think about the ones that are closest to you. But I want you to go to the website as you're listening, retirementplanningedu.org. That's retirementplanningedu.org. And you'll see those locations: the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, also the University of Missouri and Columbia College. And if you'd prefer, you can engage in this class. You can participate from the comfort of your own home. The courses are streamed live for you. So go to the website, make plans to reserve your spot now before they fill up. 800-240-8981 is the phone number. You can register by phone. Again, 800-240-8981. And remember, this very show, which is all about market volatility and how to handle what we're seeing currently in your retirement. You can download it wherever you find your favorite podcasts. Search for the name of the show, Retirement Education Hour. Now, market volatility, it's one of the many risks, really, that retirees can see over the course of their retirement, but it's a big one. And the two of you, Kirk and Paul, you say that planning really can be the antidote here.
I love you said the antidote. It literally, that's the antidote to all of your retirements. The charity, our national charity, who is now taught over, we're tens of thousands of people now. Okay. So the antidote is through this 8-hour almost master levels course. This is going to help you to find your teams wherever you're at in the country, wherever you live. It's going to help you to choose the right people to help you, exactly what to look for to give you the most optimal plan for retirement. And the optimal plan for all of you is going to be a plan that allows you to spend more income in retirement, retire earlier than you would have otherwise, help you to pay less taxes. It'll mitigate all the major risks that you're concerned in your 70s and 80s about, so that you will feel free to have the freedom to spend. And all of that really is driven by a plan, a real comprehensive plan that takes about 50 plus hours to build. And that's what we teach you in this master's level course. And the reason why we teach you the plan isn't necessarily for you to go do it yourselves, because you really shouldn't do it yourselves. You can't. You're not going to believe me, because many of you are in your 50s and you're invincible. In your 60s, you're anxious, and you're as anxious about who to trust than even doing it yourself. And in your 70s, you just become fearful, right? I mean, we see tens of thousands of you. We know we know your behavior when it comes to your finances. And so the purpose of the class is to show you what a comprehensive plan looks like, the critical aspects of those plans, but most importantly, why those critical aspects are in the plan, why they're there, and how to identify, are the people that are helping you or you're looking to help you, are they executing these strategies? Are they providing you these solutions? Do you really have a team with a CPA attorney that are communicating and coordinating as you age? And that becomes so critically important. Just realize you're not always going to be in your 50s. You're not always going to be in your 60s. You're not always going to be in your 70s. And you're going to get in your 80s. And you're going to need your team. You're going to need your team. So you want to get your team when you are cognitively sound, you understand what they are doing for you, and you have years, decades, hopefully, of time to spend with them to build the trust, so that when you're at your most vulnerable and you are cognitively slipping, that you know this is the team that's there to protect and help you. And guess what? There's attorneys, there's CPAs, their advisors are working together, keeping everyone in check to make sure no one's taking advantage of anyone. Paul, it's the plan, right?
It is. And you know, Kirk, as you're talking about the plan, I had this image of our sister and I over your lifetime trying to get you to be more of a psychologist. And I'm listening to you thinking, you know, you really have become like a mini psychologist. You know that?
Wannabe?
No, but you know, because at the end of the day, right, really when you think about what a plan does, right, when you think about what a plan does, of course, it's about numbers, right? It's about making sure you have enough money. Obviously, numbers are key to a plan. But really, what you're really talking about at the end of the day is about psychology. Because
100%.
Right, because really where people the reality is that people out there who don't have a plan, they're going to manage their spending, right? So that when the markets go down, they're going to get anxious. When bad things happen, they're going to get anxious. When a president gets elected they don't like, they're going to get anxious, and they're going to self-impose restrictions, right? And maybe find a way to get through it. But man, are they going to struggle? And is retirement going to be horrible? It's going to be so different. So what we're really talking about is we want you, the benefit of a plan is to be able to enjoy your retirement, do the things you want to do, because guess what, folks? You don't know how long you're going to be here. Do the things you want to do without fear and anxiety and worry, without your spending looking like the stock market up and down depending on what's going on. It's freedom. Is it not, Kirk? It's about the freedom to enjoy your life. And you can't put a price tag on that. That's huge. And the benefit of planning is doing that. And if you don't do it, if you don't plan, you may think you're going to be one of those people, yeah, you're not going to get anxious when the market crashes. Yeah, you're going to rise above this. You always have in the past.
That's because they're in their 50s. They're invincible, remember?
That's right. It's not going to happen, folks. You won't react the way you reacted when you were working. So if you really want to enjoy your retirement, just like if you want to, at most things in your life, plan it out. And if you want to know what a plan is, Come to the class. I promise you, the thing you have, that beautiful binder that your advisor gave you, promise you that's not a plan.
Yeah, Paul, I was going to say that. You're right. The secret here is the plan. But so many of our listeners right now think they have a plan, and I will guarantee you don't. I will guarantee it. Come, even if you don't want to come to the class, go to the charity's website and watch the webinar of what a sample plan is. You don't have that. You don't have that. So therefore, you're going to live on 4%. You're going to have fear and anxiety. You're going to way underspend what you otherwise can spend. Please attend one of these 8-hour classes. If you'd like to register, go to retirementplanningedu.org, retirementplanningedu.org. We hope to see you there.